everyone, it's Santomassimo with the Massimo Show, and I'm giddy because I got my great friend, Mr. Bob Knakal, as our guest today. Hey guys, it's Santomassimo, and I got great news for you. I have taken the lessons of the last 30 years, all the conferences I went to, and I packaged the best of the best aspects and even plussed it in a conference we're calling MassimoCon. It is going to share with you and give you direct access to 9, 7, and 8-figure producers, some amazing keynote speakers, and so much more. Oh, it's a live 2-day event in Dallas on November 2nd and 3rd. You've got to be there if you're dedicated to making sure you get in position to dominate CRE in 2023. MassimoCon is on, baby. You've got to get there. Check our social posts, check our website for your information. And yes, get there because there's only a limited number of seats left. Hope to see you at MassimoCon. Hi, this is Santomassimo, and welcome to the Massimo Show. The objective of the Massimo Show is to share how you can maximize your personal, professional margin. That's right. Let's make more money in less time. Let's turn chaos into clarity, confusion into confidence, and income into real wealth. Along with sharing my insight on how I grew a multi-million-dollar professional business, we're going to bring you the expert advice from a variety of authors, consultants, and thought leaders who will provide the tools you need to maximize your own personal and professional margin. Welcome to the Massimo Show. Bob is the only, forget 3-time, we have no 3-time guests. Bob is the only 4-time guest on the Massimo Show. Now, Bob, you're from New York, so I think there's a tradition at Saturday Night Live when someone comes 5 times, they give him a jacket. So I got to get a jacket for you. Hey, folks, Bob, welcome to the Massimo Show.
Rod, it's great to be here. Always great to see you, my friend. And I'm very honored to be making my 4th appearance.
Always transparent with my guests here. Bob's a long time, our longest tenured client, a coaching client, the Massimo Group, is Bob. He's the only client that I personally work with. And I love him. And he's a great friend. And his family is fantastic. But I think there may be some people, believe it or not, who have no idea who you are. So, Bob, who's Bob Knakal?
Bob Knakal is a guy who sells buildings in New York City. I just started year number 39. For 26 of those years, I ran my own business here, Massimo Show, which we sold in 2014 to Cushman. I'm currently the chairman of New York Investment Sales at JLL. And as of last week, I've sold 2,220 buildings in my career and narrowing in, hopefully next week, number 2222 in 2022.
It's right, too.
We'll close. So that will be great. But the thing I'm happiest about is I still love this business as much today as I did the day I decided to get into the business. It's a fantastic career, fantastic industry, great people. And I'm a guy who sells buildings in New York.
Guy who sells, as simple as that. Now, folks, if you want to go back to the Massimo Show and listen to more detailed things about Bob, you have 3 other sessions to do it. So we're going to focus on today what it means to be a market expert, because Bob there's no one I know that's an expert like Bob Knakal, pure and simple. So, Bob, how is the New York real estate market in 2022?
Well, Rod, I'll tell you, it is a mixed market. The dollar volume of sales is up. It's on pace to be up from last year. The number of properties sold is on pace to be down from last year, but both of those metrics are well below where they were in the peak. And so for some reference, if we look just at the Manhattan market as a barometer of New York City and look at transactions over $10 million, which is where we focus most of our time, the peak of the market was in 2015. In 2015, there were 484 properties sold. That dropped to a low in 2020 of 104 properties sold. Last year was 191. This year, we're on pace for 176 if you annualize what happened during the first 6 months of the year. So if that pace continues, we'd be down about 8%. And that pace is also about 64% below where we were at the peak of the market. 2015 was also the year in which dollar volume was the highest. We had $57.5 billion of investment sales in New York in 2015. That dropped to $11.2 billion in 2020. So far this year, we've had about $10.1 billion, which is on pace for about $20.2 billion, which would be up 29% from where we were last year. But even if we hit that total, that's going to be about 65% below where we were at the peak of the market. So whether you look at number of transactions or dollar volume of sales, we're down 64 and 65% from peak levels respectively. We do expect that the second half of this year is going to produce a lower volume of sales than we had in the first half of the year, mainly because the increases in interest rates have slowed the pace of transactions a little bit. But generally, we're better than we were in 2020 and feeling pretty good about that, even though, on a relative basis, we're not near the historic average.
Holy crap. Folks, I want you all to let that marinate a little bit what Bob just shared, because it's not BS, it's totally accurate. And that's the difference between being a market expert and an authority versus a commodity and just another broker. And I don't care if you're leasing or you're financing or you're selling buildings like Bob. You've got to know your stuff. And Bob, obviously, he's a master of being a market expert. So, Bob, I'm going to ask two questions, and we're going to get to interest rates because the timing of this podcast, right before we started, I got the blast in my email that just went up another 75 bips just in the last 20 minutes. So we'll talk about that a little bit. But what's the problem with saying, you start off saying, Rod, the market's mixed. And I hear that sometimes, but then you explain what that meant. But most of the time I ask the question, how's the market? People say, it's hot, it's cold, it's good, it's bad. What's the problem with that?
Well, I think even an uninformed person can use adjectives. I always like to use statistics and let the numbers speak for themselves and let people draw their own conclusion about what those numbers mean. An 8% drop in the number of properties sold. Some people may think, oh, that's really terrible. Some people may think it's not that bad. If you talk about the dollar volume being on a pace to be up 29%, some people might think that's fantastic. Other people might say, well, yeah, it's up 29%, but you're still 65% below where you were at the peak year, so it's not so great. So I like to just let people know what the statistics are, let them draw their own conclusions. And by understanding the numbers and the stats, it shows that you know what's going on in your market.
There you go. So I was listening to a podcast, the Walker Webcast, fantastic podcast, and a professor from your old college, Wharton, Professor Peter Limon was on the Walker Webcast, and Mr. Limon last week just said, look, when it comes to inflation, his words were, the worst time to buy a building is the day you buy the building. And after that, inflation, appreciation, everything's going to catch up and things are going to work out. Said, so yeah, things are tough right now. And obviously financing is harder and probably more equity going into deals. But Bob, what are you seeing in the market, especially the New York market? Interest rates are rising, loan values are certainly decreasing. What are you seeing right now, and how are you reacting and advising for folks to adjust to the market?
Rod, I think it's very interesting about interest rates. 100% of the time when interest rates go down, it's good for real estate. Not 100% of the time when they go up, is it bad for real estate? Depends why they're going up and what magnitude they go up. And then you layer on inflation. Historically, inflationary periods have demonstrated that inflation will exert more upward pressure on revenue than on expenses. So net, it's a positive thing. So there are lots of yings and yangs going on in the market today. I think that we are going to see a significant increase in trading, mainly because folks are not going to be able to refinance for the same amount of financing they currently have on their buildings. And so they'll be faced with the decision, number one, if they have the equity to effectuate the refinancing, do they have that equity? That's number one. Number two, if they have the equity, are they going to choose to put it into that asset or not? A number of the buildings still will have an equity cushion, so they can potentially sell. But I think that the inability to refinance for the same amount of proceeds is going to cause a lot of trading. So while the market will take some time to get adjusted to the new normal with respect to interest rates, and everyone is freaking out that interest rates are going up so much. But, I think historically the 10-year has averaged over 5%. So we are still at a relatively low interest rate environment, as we were completely spoiled from 2008 to a year ago or so when rates were historically so low for so long. But it's actually not such a bad thing long term that rates get to a more reasonable level. Gives the Fed more ammunition to stimulate the economy when that becomes necessary. So a lot of different people are looking at the market in a different way. There are some things that it's going to cause disruptions with this increase in rates. It may cause some selling from folks who either don't have the equity to refinance or choose not to put that equity into the building. But as an intermediary, we like to see trading activity happen. And we've had a muted trading market basically in New York anyway. Since the fourth quarter of 2015, the volume of sales has fallen fairly steadily since then. So we look forward to more activity, more volume, and some folks may not be discretionary sellers. They may have to sell for various reasons.
Now, Bob, put this in context for our listeners. Some of you are in the business for less than 10 years. So in your almost 4-decade career now, what was the highest interest rates ever were on the lending side?
Well, I can tell you that my career started in 84, which wasn't the worst of times. 1981, I think, 80 or 81 interest rates were the worst. But if I look back on my multifamily cap rate chart, I see that cap rates in 1984 were about 12.5%. And so a lot of the young folks in the office will say to me, wow, people must have been making so much money back then. And I say, well, not really, because they were borrowing at 13%. Those are the borrowing rates back at that time. So everything has to be put in perspective.
Well, this goes to everyone listeners. Look, there's always velocity. There's always opportunities, especially if you're a market expert like Bob Knakal, to create opportunities for yourself, your family, and your clients. So, Bob, how does one learn to become a market expert? How are you going to share with folks how to become a market expert? How are we going to do that?
Well, Rod, the best thing folks can do, becoming a market expert is really very easy, basic. It's blocking and tackling stuff. And if you come to Massimo Con, you will find out exactly how to become that market expert. So show up. I look forward to seeing you there. I can't wait to get there myself.
Oh, there you go, guys. Bob's going to come to Massimo Con. He's going to share exactly what he does, how he prepares for the week, give you the playbook to becoming a market expert. So beyond the other 10 amazing speakers we're going to have, just for Bob alone, you should come to Massimo Con, because Bob is the man, and Bob has no problem sharing, because Bob knows you're not going to beat him. It's that simple. So, hey, Bob, I can't thank you enough for your valuable time, and congratulations on the 4th Massimo Show, but more so, can't wait for 2222 in 2022. Thanks, Bob.
Absolutely. Okay, Rod. Always great to see you, my friend. We'll talk to you soon.
Okay. Everyone else, again, Bob's dumping a lot of knowledge on you, but knowing isn't doing. Go out and do what you got to do to become a market expert. One thing you can do right away, register for Massimo Con, dominate CRE in 2023. We'll see you there. Take care. I want to thank you for listening to this version of the Massimo Show. And please, please go out and share this with your friends, your colleagues. Heck, share it with your dog. Just share it. And more importantly, just give me some feedback, good, bad, or indifferent. We all grow from understanding what our audience wants to hear. So until next time, this is Rod Santomassimo with the Massimo Show.